Welcome to the explainer. Okay, let's be real. If you're launching a startup, that first budget, it feels like a monster, right? But today, we're going to tame it. We're not just crunching numbers here. We're actually building a financial roadmap that's going to turn that scary task into your single most powerful tool for success.
So how are we going to do this? Well, we've got a 5-step path. First up, we're going to stare down the single biggest money problem every startup faces. Then we'll get a real handle on your costs, figure out how to actually predict your revenue, and then, we'll assemble the budget blueprint. And finally, and this part is so important, we'll see why your budget is a living, breathing thing, not some document you file away.
All right, let's dive right into the heart of it, the money problem. I mean, for most new businesses, this is the biggest hurdle, period. And you've got to understand, a solid budget isn't just a spreadsheet. It is your first and, frankly, your best line of defense against becoming just another statistic.
So what do you think it is? Really, take a guess. A bad idea? Maybe not enough marketing? A competitor who's just too tough? Those are all real challenges, for sure. But the number one reason is something way more fundamental. And getting this is the first step to avoiding that very common and very final pitfall.
82%. Just let that number sink in for a second. That's how many startups fail, not because the idea was bad, but because of poor cash flow management. Plain and simple, they run out of money. This one statistic is exactly why a budget isn't just a nice-to-have. It's literally your survival guide.
Okay, so how do we make sure you're not in that 82%? Well, you have to get a rock-solid grip on where every single dollar is going. And the first step is to split all your expenses into two really simple, really fundamental categories. Let's break them down. It really just boils down to this simple division. On one side, you've got your fixed costs. These are the predictable bills you pay no matter what. Think of it as your business's resting heart rate. And on the other side, variable costs. These are the expenses that go up or down depending on how busy you are. Getting this distinction right is the absolute bedrock of a smart budget. So think of these fixed costs as just the baseline price of keeping the lights on. It doesn't matter if you make one sale or 1,000 of them, your rent is still due, those software bills are going to show up, and your team needs to get paid. These are the totally predictable anchors in your budget.
Variable costs, though, are a totally different animal. They're tied directly to your activity. You sell more products, you're going to spend more on materials and shipping. You decide to ramp up your marketing, your ad spend goes up. These costs literally rise and fall with the pulse of your business.
Okay, so we've got a pretty good handle on the money going out. Now let's flip the coin and tackle the other side of the equation, the money coming in. Realistically, forecasting your revenue, well, it's kind of part art, part science, and it's exactly where we're heading next.
Oh man, this is such a classic trap for passionate founders. We all want to believe we're going to be a huge hit overnight. But look, hope is not a financial strategy. Your projections have to be grounded in reality, and that means you've got to dig into competitor data, really understand your market size, and just be brutally honest about what's actually achievable in your first year.
And here is the secret sauce to strong financial planning. You don't just make one forecast. Nope, you make 3. What if everything goes perfectly? That's your best case. But what if things get ugly? That's your worst case. And then what's the most probable, data-driven outcome? That's your realistic scenario. This little trick prepares you for pretty much anything.
All right, so we've got our 2 key ingredients, right? A super clear picture of our costs and a realistic set of revenue forecasts. Now it's time for the fun part. Let's put all these pieces together and actually build the budget blueprint that's going to guide your every move.
See? Following these 4 steps turns all that data into a plan you can actually use. You just add up your costs, you plug in your 3 different revenue scenarios, and you see what you get: profit, loss, or breaking even. And that break-even point, that's your magic number. It's the absolute minimum you need to hit just to survive.
But here's the thing, and please listen to this part. You are not done once that spreadsheet is finished. In fact, maybe the most important work is just getting started. Because the single biggest mistake you can make is thinking your budget is set in stone.
This quote just says it all, doesn't it? Your market is going to shift, some of your assumptions are definitely going to be wrong, and brand new opportunities will pop up out of nowhere. A static budget is a snapshot of a fantasy, but a dynamic budget, one that lives and breathes with your business, that's your most valuable strategic tool.
This is the key habit you have to build. Put it in your calendar. A regular check-in where you compare what you actually spent and earned to what you budgeted. Are you on track? Why not?
This regular review is what turns your budget from a simple document into a strategic GPS for your business's future.
And at the end of the day, that's really what it all comes down to. The answer to that question is going to define how you use this incredibly powerful tool, not as a cage that holds you back, but as a compass to steer your startup through whatever challenges lie ahead, and ultimately, towards success.